Since 1972, the McIlvaney Financial Group has been a conservative, contrarian investment firm. With that mindset, they have created a multifaceted approach to portfolio management, offering a wide array of services including wealth management, a unique short fund, hedging through precious metals, and excellent educational resources. We have had David McIlvaney on our show multiple times because we respect his outlook, viewpoints, and recommendations. You really need to let them give you a much better understanding of what true portfolio diversification is. Just go to McIlvaney.com/Main Street, with Main Street all spelled out, to get introduced and to garner free information. Again, that's McIlvaney.com/Main Street to schedule your free 20-minute consulting session. Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. He is a hedge fund manager and an investor who focuses on deep value and shorting bubbles. He's a managing member of Stanfield Capital, and he also has 17 years of extensive experience working in New York City real estate, which is, it's a very tough business. Mark Spiegel, thank you for joining me.
Thank you. Thanks for having me on your show.
Now, Mark, I took a look. I found you on Real Vision TV. You have a great presentation on there. So if our listeners are Real Vision subscribers, they should go and watch your presentation. I also Googled your article there with your presentation, your slide deck that Business Insider posted on December 1st of 2016. I actually shared that with people who love Tesla, who love Elon Musk, and they wouldn't even read it. They immediately started calling me names, ad hominem attacks. They had no counter arguments. They started attacking your credibility. Is this something that you've had to deal with as well?
Well, had to is one way to put it. I just find it amusing. I mean, there's no data-based, fact-based bull case on this company, on Tesla. So yeah, I mean, that's all I get. I mean, I never get, you're wrong, battery gross margins are positive. Because they're not. They're negative in this company. You know what I mean? All I do is provide facts. Jaguar's coming out with a beautiful car in 9 months, electric, better looking than any Tesla, and probably less expensive than a Model X. What do you say to that, Mr. Bull? You're a jerk, and Elon Musk is God. That's what this thing is about. It's the biggest bubble I've ever seen in my life. I have LPs. A lot of my LPs are hedge fund guys themselves, and either current or retired. They've never seen anything like this. It's the greatest disconnect they've ever seen, between facts and a stock price. I mean, in the internet bubble, there were no facts, right? People could make up any kind of story they wanted. But here we've got actual numbers to work with, So, yeah, I'm used to it. The short answer is that's all I get from Tesla bulls.
Yeah, they completely ignore reality. And you highlight in your presentation there the enormous amounts of competition that Tesla has coming. And, the bulls could say, oh, Tesla doesn't have any competition yet. But then in your presentation, you highlight they're still not making any money. They're not generating any free cash flow without any real competition.
Well, forget free cash flow. They have negative operating earnings massively with no competition. Look, this is in my Real Vision thing too, but people say, well, give me the one paragraph bear case on Tesla. Okay, here it is. Number one, as you just said, they're losing a massive amount of money and actually showing negative scale. They're losing more money than ever on an operating basis with almost no direct long-range electric car competition, and yet a massive amount of that competition rolls out starting the end of this year and then hugely in 2018, 19, and 20. And of course, by the way, people own Tesla for the year 2025. They tell you, oh, we don't own it for today, but 2025 is when there'll be 200 competing cars, right? All right. So massive competition coming, and yet they're losing money even without the competition. That's number one. Number two, which sort of ties into that, there's no moat. Tesla has no sustainable proprietary technology. Anything they do, I can show you a bunch of guys already doing it better than Tesla does. They're just not getting the hype that Tesla's getting. And number three, Elon Musk is an extremely untrustworthy guy. I can cite many examples of public statements he made that were easily proven wrong or easily proven deceptive. And he knows exactly what he's doing when he says that stuff. So you put those three things together, and what's now, all right, it's reduced a little this week. I don't know when this podcast will air, but call it a a 60-something billion dollar enterprise value. I think the equity in Tesla is worth zero. It's got around $8 billion of debt, and I think that's probably more than the assets are going to be worth at the end of the story.
I interviewed Christopher Whalen. Not sure if you've heard of him, but he's a prominent banking analyst on Wall Street. He also has a book coming out soon about, Ford, the history of Ford, and he studied the automobile business. He called Elon Musk P.T. Barnum. And so, during that interview, we talked about the automobile business, and the automobile business, Mark, it's normally not very profitable. It's very highly cyclical. It really cannot generate free cash flow. There's very high maintenance capex associated with it. And yet, the stock just keeps going up and up and up. It's doubled basically in the last 12 months.
Right. So, yeah, he called Musk P.T. Barnum. Yeah, when I'm feeling charitable, I call him P.T. Musk. The other times I just call him Subsidy Leech Boy, because every business he has is based on government subsidies, and they still lose money. He's the only guy who can pull down billions in government subsidies and still not make money. I mean, that's a rare gift in a way. But, to your point, yeah, I mean, autos are a really tough business. But then, you tell this to the Teslemmings, and they'll say, well, Tesla's not in the car business. And then you say, well, what business is it in? And well, it's in the energy business. Okay, well, guess what? Panasonic makes Tesla's battery cells. Panasonic will sell battery cells to anybody, okay? Every automaker in the world right now is developing long-range EVs that cool themselves just fine and regulate the current just fine. So there's no special sauce to Tesla's packaging those cells in a battery pack. Everybody can do that. The energy storage business is hugely competitive. And in fact, Tesla's energy battery storage business last quarter had double-digit negative gross margins. Forget what the operating margins might have been. So, basically, are we allowed to curse on this show because it's just a podcast?
Yes.
All right. So basically, every business that they'll tell you Tesla is in is a shitty business. And when you put together a collection of shitty businesses, you don't get a good business. You just get a bigger pile of shit. And that's basically what Tesla is, to put it bluntly.
And yet they bomb, quarters, and the stock price, people are buying the dip. So he has a lot of people fooled right now, in the short term at least.
Well, what you've got here is 20-some-odd% of the stock is controlled by Musk, so that's out of the float. And then you've got a really no homework, almost an embarrassment of a portfolio manager at Fidelity who owns, I think, 15% of the company. And, that maybe that guy will ride it to zero, or maybe he'll wise up at $30 a share. I don't know. But they profiled him in the Wall Street Journal a few months ago, and you could just see how vapid his level of analysis was. As, by the way, in my opinion, Ron Barron, who, he gets on TV and he just spouts the most vapid nonsense. He's obviously either hasn't done any real homework here, or, is afraid of what he might find if he did real homework. These guys, there's a bunch of guys who basically have a man crush on Elon Musk, which I don't really understand because the guy is easily documented to be a liar. I mean, on a conference call, we don't discount our cars for anybody. And while he was saying it, there was a $1,000 discount referral program on the website, and there were hundreds of brand new, never driven inventory cars discounted, anywhere from $2,000 to whatever, $12,000. And that was last year that happened. Even right now, I looked the other day, there were discounts of up to $22,000 on brand new Tesla inventory cars. So, I mean, I think part of it is, I don't know if Musk knows what the truth is anymore, or he just likes to see what he can get away with. There's a very well-known politician now in the U.S. of national stature. I won't name names, but he contradicts himself every other paragraph with what the truth is and what it isn't. In other words, he lies every other paragraph. He and Musk resemble each other in many ways. You might be able to guess who I'm talking about. So,
Now, you mentioned that Tesla has a bad balance sheet. With their stock price so high, why don't they just start selling equity then to clean up their balance sheet, in your opinion?
Well, they should. I mean, they should do it now because once the death spiral happens, it'll be a disaster. I don't know why. I mean, last week, Musk just extended the credit lines and raised another, or Tesla did, raised another, 600 and something $million on the credit line rather than selling stock. So, look, the guy probably thinks, maybe he thinks he's going to have a higher stock price. I don't know. Certainly, look, I'm an ex-equity capital markets guy, and when you've got last week it was a $380 stock trading, 6 million shares a day. So whatever that is, you get $2 billion a day, $2 billion a day of buying. You can very easily, sell $2 billion of stock, just sell it at a 5% discount, and boom, the deal's done, especially in this market. But he didn't do it. So I don't know if he missed his window or, look, maybe he thinks he has a few tricky press releases up his sleeve and he'll put another spike in the stock and sell into those. I don't know. Of course, now it's really too late in the quarter to sell stock because there's a week left in the quarter. Isn't even a week, right? There's a day left in the quarter. And typically institutional investors won't do a deal this late in the quarter because they don't want to look stupid, even though it's almost irrelevant with Tesla because Tesla blows every quarter. So it's like if they didn't blow the quarter and they had done the deal, these guys would look like geniuses. If when they do blow the quarter, which they always do, they'll just be like, oh, yeah, we knew that. It was built in. So.
Now, do you think he's worried that if he does start selling more equity, that he would get a big margin call because he has a lot of loans against his own share position?
I think, look, we don't know what that number is, but my guess is that number is far, far below where the price is now. It would probably have to be under $100 a share. I mean, based on the amount of stock he owns and the amount he's publicly reported to have borrowed, I don't remember the number anymore. I could look it up, but it was hundreds of millions of dollars less than $1 billion. Okay, so somewhere in the high hundreds of millions, I believe, is what he borrowed. So with the amount of Tesla shares he has, the stock would have to be under $100 for that. By the way, eventually he will get those margin calls. I have no doubt about it. But he's far from that now, so it wouldn't be an issue now for him.
Yeah, he's almost gone bankrupt a few times. I actually did read his biography that was written. So he's always been a very high risk taker. When he took his PayPal money and he went bankrupt a couple times, he had to go to the government for extra loans for bailouts and things like that. But with the Model 3 coming out, how large a losses per car do you think it's going to be? He's not making a profit now with the luxury car at a higher price point. Is he gonna lose over $10,000 a car coming out with this cheaper car?
Right. So, by the way, before I answer that, to your previous point, yeah, Musk is a reckless guy. He had I don't know if you're a car guy yourself or how old you are, but he had a McLaren F1, which was the supercar of the 90s and maybe the supercar of all time. And when they were new, they were $1 million, and now they're worth probably $15 million. And he had it without insurance, and he wrecked it. Apparently, he didn't even have the thing insured. So, I don't know what that says about the guy. To your point about the Model 3, look, without going too far into the math here on a podcast, my guess is that, and I've written about this a couple times on Seeking Alpha, my guess has been that break even on a base Model 3 would be somewhere in the high 40,000s. Now, UBS did a detailed report where they tore down, I think, a Chevy Bolt and did a bunch of analysis, sort of, laterally across into Tesla. And they said that break even on the Model 3 would be $41,000. So, that he could make that Tesla could have some margin with options above that level. So, it's possible that break even is 41, but regardless, he'll never sell a car for 35. And he's even saying now, and based on the sort of the test mules that are around, that, the initial cars aren't going to have a lot of choices. And my guess, he hasn't said this, but my guess is they'll be fully loaded because they're showing them with the glass roof. And apparently, based on what somebody saw on one of the display screens, with the bigger battery. So we don't know what that battery is, either a 70 or a 75 kilowatt hour battery. And you put all that together, and I'll be surprised if he puts a Model 3 out the door for much less than 50,000, So, if UBS is right, at 50,000, maybe he can have a 10% gross margin on the Model 3. But, you got to put that in perspective. The gross margin on the more expensive cars is around 23%. And by the way, this is a whole nother discussion, too into the weeds for this, but Tesla's gross margin is completely phony relative to the rest of the industry because they don't include any engineering costs in the COGS line. And then, of course, they operate their own dealers. So whereas the rest of the industry sells cars at a discount to a dealership network, Tesla puts all that dealership expense on its SG&A line and therefore gets to claim a higher gross margin. But using Tesla's number, its gross margin on the cars with an ASP of about $108,000 on a sale basis, putting aside lease cars, is about 23% roughly. So the 10% gross margin on the much less expensive Model 3, my guess is that they're going to lose probably 15% of their S and X sales to the Model 3. Guys who would own a Tesla and would perfectly be happy with the Model 3 and instead bought a Model S. And so whatever small gross margin they make on the Model 3, my guess is it's going to get, they'll lose it in the higher margin that they give up on the S and X, or a big chunk of it. So, overall, even if there's some margin in the Model 3, my guess is it's, operating loss-wise, it's probably not much better than a neutral for the company, relative to what they lose in S and X sales.
So they could.
And by the way, that's before all this. Go ahead. I'm sorry. Go ahead.
I was going to say they're going to basically, with him rushing out the Model 3, they're going to be cannibalizing their higher margins, and then you add in all the other competition that you've highlighted in your articles that is coming online in the next 3 or 4 years, 2020, 2021. Pretty much every single auto manufacturer is going to be bringing on competition for Tesla in different price ranges, makes, and models.
Yeah, you don't even have to go to 2020, 2021. In 2018, literally 12 months from now, you'll be able to buy a gorgeous Jaguar I-Pace. I think it's an I-Pace or an E-Pace or something Pace. I think it's the I-Pace. Or the beautiful Audi e-tron. They're both great-looking crossovers. They both have far nicer interiors than any Tesla because Tesla's weakest aspect is probably its interiors. And they're going to cost less than the comparable Tesla. So between the Model 3 and those two cars rolled out in just 12 months, Tesla's going to take a big hit on the higher margin S and X sales. And of course, even with the high S and X, they had an operating loss of they had an earnings loss of like over $300 million in Q1. My guess is the current quarter is probably as bad or worse. The Q2 that they'll report in a month or so.
What's your opinion then on a lot of these other?
I'm sorry.
Sorry, go ahead.
Yeah, let me interrupt you for 1 second. Let me just make one other point. The other thing to keep in mind is, including the quarter that they're going to report maybe this weekend, which is Q2, there has been essentially zero sequential growth in Model S and X sales for 4 straight quarters now. So people talk about this being some sort of a hyper-growth company. Well, yeah, I guess they can add a lot of more models and try to grow, but their core product, which is the higher margin product, is not growing at all for 4 straight quarters. And again, that's before all these luxury competitors roll out. So go ahead. I'm sorry I interrupted you, but I just wanted to get that point in.
And the 4 straight quarters you're talking about with no growth, the stock price has doubled. So maybe it's a short squeeze or something along those lines. But yeah, with all these other competitors coming out, they're going to destroy Tesla's margins. And, even if they fail, the articles on Seeking, Alpha Mark, your other contemporaries writing, a lot of them are bullish Tesla. They're saying how the other electric vehicle competitors are going to fail. But even if they don't succeed that much, I think they will still weaken Tesla's margins even further.
Those guys are laughable. The guys who write these articles, they're going to fail. First of all, I guarantee you that the German cars will not have to go into limp mode on the Autobahn at very high rates of speed the way a Tesla does, because a Tesla overheats. And secondly, they're actually leapfrogging Tesla in battery technology because they're going to larger cells, what are called prismatic cells, which are, less expensive to assemble, and probably easier to cool. And Tesla is stuck with this cylindrical battery, which they originally designed back in, I don't know, 2005 or something, or 2006, because at that point you couldn't get these prismatic cells. And also, people talk about, oh, Tesla, the Gigafactory. Tesla had to give Panasonic a massive take-or-pay contract in order to entice Panasonic to install its machines in Tesla's factory. My guess is, based on numbers that we're hearing from other manufacturers, based on pricing they're getting from LG and from Samsung, et cetera, that Tesla might be the highest cost, might have the highest battery cell cost in the industry 6 months or a year from now. So, obviously they black out those parts of the contracts in the SEC filings, but there's a really good chance that Tesla will be at a price disadvantage on the batteries to everyone else, not to mention the massive price disadvantage they're at in terms of, building the rest of the car. I mean, Tesla, to put this in perspective, the BMW plant in the U.S. has 9,000 employees and built over 400,000 cars last year. Tesla has 6,000 employees and built like 77,000 cars last year. That tells you how inefficient Tesla is as a manufacturer, and how these lazy so-called business journalists who say, oh, Tesla's got all the robots, they've never been in a real auto plant other than Tesla, and they've never crunched the numbers to see Tesla is horribly inefficient. It's a terrible manufacturer. And, of course, has the huge, the terrible reliability now, which you can see on the forums or in Consumer Reports. So not only are they building inefficiently, but they're building badly.
I want to ask you now my last question about Tesla before I ask you a couple other questions and then let you go. I want to ask you about the Solar City buyout that Elon Musk did with his cousins. Do you think this was a bailout using $4 billion in shareholder capital?
There is zero question it was a bailout. And you know what? The dumb Tesla shareholders who voted for it will wind up getting what they deserve at the end of the day, which is a stock worth zero. That tells you a lot about what kind of guy he is, that he put that thing through. And by the way, as part of the way to try to get the vote through, you probably remember he had that special event in Hollywood last October showing like these solar tiles. Well, as it turned out, from what I've read in various accounts, they were fake, those solar tiles. They didn't even work at the time. And he had this event to show it would be the great synergy of putting these things together. And then they came out with these solar tiles, and they put this cost calculator on the website, and I ran through the numbers, and I wrote about this on Seeking Alpha. It was the most nonsensical cost analysis you've ever seen, because they tell you that they're claiming these savings over 30 years, which, by the way, may not even happen depending on what inputs you put into that thing. But they forgot to point out that you're laying out, $80, $90, $100,000 up front, and they put zero opportunity cost on that money over the 30 years, So it was ridiculous. And look, Musk maybe isn't a financial guy. He's not that stupid about financials. He's a deceptive guy. It's a deceptive company. The NDAs they get people to sign when they fix your car. There's a lot of stuff going on there that if you just put two and two together from the forums, there are probably safety issues with this car. There's a big sudden acceleration lawsuit going on right now. I just saw some new papers from that. There are these potential issues with the suspension. The autopilot is horribly dangerous. You can look all over YouTube and see it crossing, the middle of the lane and going into oncoming traffic, and people are reeling it back in. No responsible car company would release that stuff on the public roads, and yet, Tesla does it. It's completely so. This company will wind up in court 6 different ways before this is all over.
And Elon seems to be, kind of ADHD, because, he's moving on to other projects. He's already building tunnels in LA with his Boring Company. He's talking about a music streaming service, and he released the Hyperloop thing a couple of years ago. So, I mean, it doesn't seem like he's very focused on this as well.
Well, it's a combination of, look, I don't know the guy, but, it seems like it's a combination of ADHD and just pure stock promotion. The old gambit, like, when things are going badly, hey, don't look at that. Look at this shiny new object over here, So he's always coming out with shiny new objects, although I don't know what tunnel boring has to do with Tesla, unless he's put that in this company. But so it's a combination, I think, of those two things: ADHD and just old-fashioned stock promotion. The old try to distract people from this pile of crap I'm trying to save here.
I could talk about Tesla for a lot longer, but let's transition now to another one of your short positions. You're shorting the Japanese yen. You're joining Kyle Bass on that trade. In your opinion, why hasn't the yen crashed against the dollar yet?
I don't know why it hasn't crashed. I mean, look, I've had this on since late 2012 when USD JPY was around 79. So we've made a little bit of money on it, but all I know is since I think early 13, the Bank of Japan has been printing the equivalent of, well, it started off at 35% of the monetary base every year. Now the monetary base has grown so much that it's printing currently around 20% of the monetary base per year. And that's on a compounding basis. You can't do that without destroying your currency. Again, without getting too in the weeds here, just the interest alone on Japan's debt is over 9% of the budget at an average rate that the government's paying of 1%. Okay, so if Japan gets the 2% inflation that it's trying so hard to get, and let's say rates normalize then at 3%, Japan's interest on the debt will be over 28% of the national budget. That's completely, they'll just default. That's unsustainable. But what will happen is, before rates get to 3%, the BOJ will be going, holy shit, we can't let rates get to 3%. We can't let rates get to 1.75%. So they'll print more and more yen to try to buy more and more debt to try to cap, interest rates, which is destined to fail eventually. But in the meantime, they'll crash the yen doing it. So that's what I think is going to happen. And then first they'll crash the yen, and then they'll crash the bonds, and then then they'll reset the whole thing. But to put this in perspective, in the 1980s, the yen was at 250 per dollar. And if you go back to the 1970s, it was at 300 per dollar. I mean, we could easily see 250 per dollar, and we could maybe see 300 per dollar. When? I don't know. Maybe it takes another 5 years. Maybe it takes another, 10 years. But I think it's within 5 years from now because, I think things are accelerating, and we've got the Fed is actually in a somewhat of a tightening mode, and yet Japan is printing as much as ever.
Yeah, there's been competitive devaluations really since the 2008 financial crisis. Ben Bernanke put out a paper about this, that if everyone takes turns devaluing, then no currency will collapse. So they're kind of doing this live science experiment. The Bank of Japan, their balance sheet is over $4 trillion US at this point, and yet the yen, hasn't crashed yet. So I think, I agree with you that all these currencies could potentially crash. It's just none of them have done it yet. And yet, asset prices...
Well, a couple of things. So, first of all, Ben Bernanke is one of the stupidest, least common sense people I've ever seen in my life. Oh, yeah, if everybody prints, then it would be great. So, pick up a history book, Ben. The guy's just an idiot. Seriously, he's an idiot. I mean, he might be a PhD and could, come up with a bunch of fancy theories. I don't think he could tie his shoelaces. So, but that aside, even within that context, Japan has been way more devaluating than the U.S. has been. Even when we had QE, Japan was printing as a percentage of GDP and a percentage of its money supply. They were printing a hell of a lot more than we were. Mm-hmm. So but now we have the wind at our back here. So it can't continue. And there's no escape. I mean, Japanese debt to GDP is on a national basis is over 250% now. I mean, it's crazy. So to me, it's like if people say to me, what's your one? You're going on a desert island for 5 years. What's your one set it and forget it trade? It's short the yen against the dollar.
I have one more question before I let you go. As a value investor, are you having a tougher time finding undervalued stocks, especially in larger companies, because of all this money printing that the central banks have done?
And it's not just in larger companies. I mean, look, I've made most of my money as a deep value micro cap and nano cap guy. Companies that it's just a less efficient market. Like there's a lot of smart guys running a lot more money than I am who would look at those companies and see exactly what I see, but they just can't play there because, the companies are too small. I have not been able to find a new one of those for like the last 6 months to add to the portfolio. And normally, a concentrated portfolio. So normally I would find, 5 or 6 of those a year to buy, 3 of them, 4 of them a year to buy. I haven't added one in at least 6 months. So yeah, that tells me that this entire market is just outrageously overvalued. And people will say, well, it's a little pricey on PE basis, but earnings are so great. But where would earnings be if you didn't have negative real interest rates in every economy in the world, including the U.S.? I mean, we've got a 2% or 1.7% inflation rate, and we've got 1.25% short-term rates. So even in the U.S., they're paying you to take money. What would all those earnings look like if we had positive real interest rates? So it's like to say that stocks are reasonable based on earnings. That's a bubble based on a bubble, right? The underlying bubble is worldwide negative real interest rates, which is a completely unnatural state of existence.
And if you also back out the share buybacks that were used with debt to boost the earnings per share higher because there is no real revenue growth for a lot of the large cap companies, the PE ratios would be even larger than that.
Exactly. That's a great point. That's a good point, too. Right.
Do you think, though, that this is one of the 4 most overvalued stock markets of all time, up there with 1929, 1999, and 2007 then? Well,
if you look at Shiller, it's number 3. So Shiller PE is around 30 now, roughly. It was the low 30s in 29, and I think it was over 40 in like 99, 2000. But in 99, 2000, we actually had really good top-line growth, at least, broadly speaking, better GDP growth and everything else. I'm not excusing that. That was the biggest bubble, ever. So the answer is, on that basis, it's the 3rd biggest bubble ever. But in a lot of ways, it's more expensive than 29. So I would say this is definitely more of a bubble than 07. This is probably the 2nd biggest bubble ever after the 99, 2000 bubble.
Well, I enjoyed our discussion today, Mark. I could probably talk with you a lot longer, but I don't want to take up too much of your time. If our listeners want to find more of your work or follow your articles, how do they do so?
I guess the best thing to do, because I have a really bare bones website. I think the best thing to do is you can follow me on Twitter, which is at Mark B Spiegel. Spiegel is spelled SPIEGEL, and I'm an active tweeter. A lot of Tesla stuff, but some macro stuff, and throw in a few non-politically correct jokes. And the other thing is, I've written a lot for Seeking Alpha under the name Logical Thought is the name I use there, but I put my real name there too, so I'm not hiding anything. I just thought that was a catchy way to do it. So you can find my stuff there, or you can just email me, and I'm happy to correspond that way. My email is mark@stanphilcap.com, and Stanphil is STANPHYL. So that's how you can reach me, mark@stanphilcap.com.
Well, thank you for your time, and we'll get you back on in the future for another update on Tesla.
Yeah, it was a lot of fun. Thank you. Good luck with your show.
Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALL formanst.com, website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street from Main Street.